At what point does it actually make sense to become taxed as an S Corp in your service-based business? If you take a look at this scenario up here, let's say you have your revenue $100,000, your expenses $50,000. This leaves you with a net income of $50,000. If you operate as a sole proprietor or single member LLC and you're not taxed as an S Corp, you pay two different types of taxes. You're going to be paying federal income tax as well as self-employment tax on the full $50,000. Self-employment tax is equal to 15.3%. Federal income tax, let's just assume you're a single taxpayer for 2026, you claim the standard deduction, you're going to be paying about $3,823. This leaves your total tax liability for 2026, $11,473. Let's see what happens if you elect to be taxed as an S Corp. When you're an S Corp, you pay your self-employment tax on the reasonable salary that you pay yourself instead of the full $50,000 on your net income. In this scenario, let's say it's $30,000 that you're going to pay yourself as a reasonable salary. You end up paying $4,590 in self-employment tax. Income taxes, federal income tax remains the same. You're still paying federal income tax on that $50,000. We also have to consider any other fees that are associated with maintaining the S Corp, like S Corp tax returns. So that's going to be about $1,000 at this level. We also have to consider how much is payroll, since you have to be paying yourself through a payroll system. This is about $60 a month. So all in, you're going to be saving at this level about $1,300 in tax savings compared to if you're a sole proprietor or single member LLC that's not taxed as an S Corp. Keep in mind, this is also not considering state taxes or any other special deductions like the qualified business income deduction that you qualify for as a self-employed person for the sake of simplicity. So I'd say around this $40,000 to $50,000 net income range, this is where it starts making sense to ask, at least starting the conversation to see what would happen if you're taxed as an S Corp. What would you do with an extra $1,000 or $2,000 in your business that you get to keep that you don't have to pay to the IRS? Send me a DM if you'd like me to do an exact scenario for you using your actual financials in your business to determine if becoming an S Corp makes sense for your business.